Hey guys, welcome back. Sorry it's been a while. It is Tuesday, March 8th. We have been doing a 24/7 live stream until the GME short squeeze, and my power went out and it's got halted. So I just decided to stop streaming for now. I'll probably stream for earnings. I had to give you guys a recap though on what we kind of discovered while streaming live. If you were here towards the end of the last stream or the end of, I guess, yesterday's trading, you saw us kind of figure it out. Sub up, like up, comment down. Happy money sticks around. We have a Discord server you can jump on. Link for that's in the description, as well as a Twitter account at Happy Money YT, where currently I'm getting roasted by moron GME investors that think I should not be able to ask investor relations a question. Okay, sorry. Not all investors of GME are morons. Okay, so what we were looking at, like crazy. So I'm just gonna go over this kind of brief TA. This is all that I really have to share, and I'm excited about, and it's just kind of crazy how it's working out. It's speculative. This isn't financial advice. I'm heavily invested in GME, and to see it maybe play out with algorithms and basically being able to potentially see kind of a repeat is insane. So we'll go over it real quick. So we have the theory of pre-earnings run up. I'm not going to go over why it happens. I don't know. I don't really care. Here's earnings. GME prices has been always ripped up before earnings. We have certain days, so many days when it starts, and then sometimes it shorts down before it. Whatever. If you look on the chart, you can clearly see earnings, there's always been a run up, and then they shorted after earnings. And you can see between earnings, after earnings it's shorted, and then there's a kind of a flat period before it runs again. Earnings rips, shorted, flat period, and it runs again. Rips, earnings, shorted, flat period, runs again. So this flat period we've been calling troughs. Just like on a wave, this is a trough, this would be a crest. And the troughs have been pretty repeating in their way they look, the price action. This one was drawn out a little bit more, but these last two are pretty similar. Hit a low, had a little peak, and then came back and retested that low before it ripped. And even looking at the MACD and stuff, it's very similar to another trough like this one. So ripped up, earnings, shorted down, hit a bottom, had another peak in the trough, and then retested that low on that trough, and then ripped up pre-earnings, and then shorted back down, right? So coming down here, I wasn't sure if we're in a trough or not, and it looks like it's possible that we are in a bigger elongated trough. And so what we were doing yesterday, when we were getting just shorted into oblivion and I was losing thousands of dollars and close to being margin called, I just started looking at how low the RSI had come. Like, this RSI is crazy. I'm not seeing it this low in a while. And on the hourly chart here, these are hourly candles, notice the RSI went all the way down to 18. It's like, that's crazy. So I started looking back to see where can I find that it's at 18 or anywhere that low, and it wasn't anywhere. Where I finally found that they were able to push it down that low on an hourly time frame was right here. I was like, oh, interesting, that's 18. And I was like, wait a minute. This is the second test on the trough area, which we were theorizing that we might be in already up here, the second test of this trough before the rip, right? You come down, hit a bottom, little peak, and then a retest, and then a rip into earnings. Here's that day. So I'm like, wait, we found it. I wasn't looking for anything specific. I was just wondering where the next lowest RSI was on an hourly time frame. Relative strength index, you can look up what that means, but basically it's crazy that this was the last time, and it was at the second test of the trough before the earnings rally. So I looked at this, I'm like, wait, that's the same. They were able to basically apply enough pressure, and that was all the pressure they could give, and it was the same RSI as we're having now. I'm like, wow, that's also interesting. It's at the same time frame in the cycle that we were thinking maybe that we're in right now. Like, okay, that's pretty interesting, weird. And then I'm like, wait a minute, this was also a Monday, and we got shorted to crap on a Monday yesterday. Like, wow, that's a lot of weird stuff lining up. I'll pull up TradingView here now. Like, this also looks like a pretty similar even move in size. See if we can get daily candles, right? So I'm looking at March 10th here. Like this, I mean, let's just check. So I'll do the percentage from bottom to top. 12.63% drop on that Monday. On the second test, here was the first test, little peak, second test of the trough, and then rip into earnings. 12.6%. Remember what we went down yesterday? So there's the whole move. 18. Okay, that was the whole move. Open to close. Whole move was actually 19%, so that was larger. But if you look at open to close, $13.6%. We had a 13.6% drop on a Monday on what looks like the second test of a trough before earnings. Earnings has now been announced that it's here, so it's coming up very quickly. So a very similar amount of drop. RSI was the same as far as how oversold it was. It was on a Monday. Like, oh wow, crazy. So yesterday we might have actually been at this candle. And even yesterday on the stream, I was like, well, tomorrow in the next couple days, it'll only confirm if this is true. If I was saying if today, if we break through and break supports, then we're probably not in that range. The cycle's changed, algorithms have changed, the cycle's different, which it still could be. But I said if we do any kind of little bounce or hold up anywhere, it's proving that it's true. And it's not proving it yet. We'll have to see, in my opinion, a run and breaking this resistance of, up here, basically confirming that we're in a trough and they're going to break resistance. Or back here, we start breaking that high from the trough. And then today rolled around and like, okay, this looks perfect. If we're looking something like this, I mean, this opened a little lower, but it was a support and it was literally the low. Today or yesterday we hit that low, I think, and then today we're having a green candle and we've rebounded and we're on our way up. And what's even more crazy is let's see if I can figure it out. I don't use TradingView, sorry, not accustomed. So I even looked at like the hourly chart on here and I wanted to see the move. I'm like, wait a minute. So look at this move even. So the move bottom to top was 12%. This is on the hourly chart. That's today. Today's move bottom to top was 12%. Okay, let's look back on that same Tuesday. What was going on? Bottom to top. So here's the drop, just like our Monday. What's this doing? That was 9.68%. Similar move up. Not as big, but look at just the price action. Big rip up out of this way oversold territory, just like today, kind of settled down and consolidated. Really just set up kind of a bull flag and ended up doing, let's see what it ended up doing. 5.7% open to close that day. Today, Gamestop on our bounce out of our way oversold stature. See this bull flag? This big rip and then consolidation into close. What was our range today? Actually, I don't even know. 6.4%. Very similar price action. Very similar. So I think I think this is a trough. Every day it kind of repeats. I don't think it's going to take this long, but it could. Every day we kind of affirm this, that we're in this zone right here, the second test of the trough, and we're going to rip. I'm going to just be more confident that we're in this zone right here just before a big rip on GME. A couple of things. One is this was before earnings, pretty far before earnings, so we don't have much time. Earnings are right here. This is wrong. Earnings are the 17th of March, which is next Thursday. So during this run, it's possible we might be midway up at earnings. Earnings has always been shorted for GameStop. Maybe we're midway run up, it gets shorted, and then we continue our rally from rolling over futures, swaps, whatever. I'm not sure what the rally's from, but maybe that happens. Or maybe we rip up, and then earnings is somewhere around here, price action, and it's bullish, NFT marketplace, positive EPS, whatever, and the squeeze starts. A lot of crazy things going on right now with RC, buying Bed Bath & Beyond shares or releasing or disclosing of it. NFT marketplace probably coming out any day now. So yeah, I'm stoked. I'm stoked that we bounced, and honestly, just these 3 candles, I was like, okay, this looks very similar. Even back here, it wasn't 3, but it's just like, it just fell off. This was such a big bad day in the middle of nowhere. And really the move back here did it kind of in 2 days because it gapped down and then rallied from there. Yesterday we did most of the move yesterday, and then it's kind of did more of the recovering today. So what I'm thinking is, if it's similar to historical price action, this was 1, 2, 3, 4 days. I think it's going to happen maybe sooner than that though. But what we're looking for is, let's see, today's Tuesday. Yeah, I guess that would be 4 days or 3 days. I think we'll probably be at about 120, 125 in this range by end of this week, which is what, right here, the 11th. So the next 3 days, a pretty good size move up, and then potentially we will start to break this trough peak resistance, just like we did here and here, and at every trough we've broken resistance and had a rally. And then how high we go up, this is another very interesting thing. I did the math, and I'm not go through it here because I suck at math and I don't want to embarrass myself again. But I did it, and you can double check it. But basically this percentage on the trough from the low to the high, I think it's about 15%. And then the move from the bottom of the trough to the top of the pinch on this one, I think this one as well, but definitely on this one, was 50%, or roughly 50%. So relatively, this move was 50% bottom of the trough to the top of the trough, so it'd be right here. So relatively, if this was a 50% move, then the move from the bottom of the trough to the peak, just like here, is 166%, which is very interesting. If we look at 166%, where does that put us? Right about at our last peak. Right here, 160. 150, 160. I don't know what's gonna happen. That's what I'm seeing. It'd be sick if we were up there before earnings, but at any rate, I'm hopeful for good earnings too. None of this might play out. It's possible we just consolidate here into earnings. It's possible we just dump into earnings. The market is in a different place at this point than we were in the last pinches. The market's definitely unsettled. We've got war going on. Oil prices. We've never had a recession without oil prices at this level. So yeah, hard to know exactly. We could still have a big Volkswagen dip, even more so than this. If the market really actually crashes, GME could come down. I think the last final dip number would be in the 40s if the market actually has a crash. I don't know if they'll be able to bring it down that far, or if they'll be able to even break this support. The algos have been pretty tied, in my opinion, to this cycle, and their hands are pretty tied. I think this was a lot because of, well, for one, right here, Citadel, wasn't it Citadel? 1.6 billion. Someone got a huge infusion of cash, and literally right here from then it just got shorted way down more. Anyways, thanks guys for watching. Sub up, like up, comment down. Happy money sticks around. We will see you on Discord, and hopefully I'll get a video out tomorrow. Our options are basically all screwed though for now. Okay, peace out.